It's not about the level of inflation. Never has been, Michael. It's about the rate of change of a price basket of things that are inflating. And that's absolutely what Quad 4 is. Sometimes it's deflating, sometimes it's inflating. You'd have to be a certified idiot to say that oil at a negative oil price, which it was in Q2, which impacted, again, the price of Bitcoin was hostage to Quad 4. This is obeying the laws of thermodynamics. It is the secret to the universe. It is calculus. It's rate of change. So again, I think, and it would be great that if Bitcoin bulls who have the long-term story nailed down would just cede that point. The rates of change, it's not unlike the weather. The rates of change of growth and inflation absolutely impact the price of Bitcoin. And if people knew that, you'd have more people, less concerned or worried about buying Bitcoin because they'd have the confidence to buy it during a hurricane. A hurricane or Quad 4 conditions is when you have disinflation. So I don't know how somebody would refute that. Can you?
Well, Keith, once I understood Bitcoin, I would go to bed with anxiety at night feeling short because I worried that somebody else would figure out what I'd figured out and they would buy it all and I wouldn't be able to buy anymore. And so once you get something and you look out decade or decades, the only issue is, how do I buy more of it?
Yeah,
that's all we're thinking.
So you should be going to bed at night feeling great about the next Quad 4 is what I'm saying. Why is it so hard to just say that? This is just, we're using math. We're not using, narratives here. We're talking about, if you understand that the rates of change of economic gravity, we're talking 101 thermodynamics here, that you don't have to have those anxieties. I have zero feelings about Bitcoin. Zero. And I'm happy about that. That's what I want to store my wealth in. But I want to do it.
Keith, you got to own something, man. At the end of the day, you got a family, you got a company, you got a future. Look out 30 years and try to figure out what you love. Wine, you're going to own that. What's your passion? What is it that you're going to own, that you're going to hold? I would buy into the notion that maybe when, if you got a model and it says Bitcoin is cheap or it's better or whatever, buy more of it. I just think the danger is selling a good thing. I'm not very good at selling my things, Keith. I'm good at buying. Once you find something that you love, you should hold it, because if you sell it to buy it cheaper, then you're betting that other people that have this short-term model are going to act however they're going to act. And you might be right, but you might be wrong. And at the end of the day, if you're buying something that you expect to go up by a factor of 100, then selling it or buying it this year is going to be plus or minus. If you bought Apple stock at $2.25 versus $2.10, it seemed like a big difference back then. But what if you made the mistake and you were short the share and you missed the next $100 run-up? I mean, that's the danger of near-term trading. So
yeah, and the opportunity. I don't think this is a debate about trading. If we want to reduce this to you guys are traders and we're the ones who get the long term, that's fine. I've been reduced to I know nothing about long term, about anything, including my own company, my own family, my life. I'm just going to get up every morning and do the best I can to understand it and put a risk management wrap around this. If it's truly an asset allocation that one should hold over the period that you're talking about, like forever, there should be some risk management around this thing, should there not? Or it's just because buy and hold is not, Michael, that's not something, that's something that companies and executives have been trying to sell me their stock for 20 years have been telling me to do, and I'm just not willing to buy into that.
It seems to me like every billionaire on the planet got there by buying and holding something, Keith. I mean, tell that to Rupert Murdoch or Warren Buffett or Jeff Bezos or Sergey Brin or Mark Zuckerberg.
What does that mean? Not everybody's going to be a bit, I'm not a billionaire, but I'm certainly not worth $1 million. I did that. You're talking to a guy that understands. I built my company 13 years ago and I bought and hold it. I get it. I totally get it. But I would not.
So why would you tell the average person that they ought to trade everything 1,000x?
I didn't say that.
It's a lot of work. It's very complicated.
I actually didn't say that. I said that.
The tax code is very hostile to that.
I didn't say that at all, actually. What I said was, if you believe in Bitcoin like I do, I bought the living daylights out of that in April and May. If you believe in it, why don't you understand it so that you don't buy it at a bad price? There's nothing.
If you believed in it, You wouldn't sell it.
Yeah, that's fine. I mean, I don't have to believe in it the way that you do, but I'm trying to say that there is a better way to buy it. And in a level of awareness on that, I still haven't heard why economic gravity does not affect Bitcoin.
Okay, so my point here is that if you're a professional trader and that's what you do, or if you spend 10, 20, 30 hours a week and you devote the effort to it, and if you've got all the offsetting positions and you can manage the tax issue and you've got all the platforms, then maybe you can do something there. The average person doesn't have the time, the wherewithal to do it, and the tax code is hostile to moving in and out of positions. I mean, one of the most intelligent things you can do is just buy something and wait for 10, 20, 30 years, because all your gains accrue tax deferred. And so telling the average person, like I can't go tell my father, I want you to go and study up 20 hours a week on trading strategies and take 50 different offsetting positions every year. What I can do is say, Dad, buy a bar of gold, put it under your mattress. And that's what he would have done 30 years ago. Now we have a better idea. You can buy a bar of Bitcoin and you can put it in your hard self-custody wallet and you'll have it and no one can take it away from you. It's a investment strategy someone can execute.
Yeah, 100%. I agree with that 100%. I mean, what I'm trying to articulate is the very basic concept of a drawdown of your capital. You know, so again, you can buy it at 19,000, or you can buy it at a much lower price when Quad 4 hits. And I mean a much lower price. We're talking about significant drawdowns. It's not like you can just, everyone can pile into it at today's price and has that duration, Michael. I mean, especially if we're talking about the billionaire who's going to be dead in like 10 years, he might think about, okay, maybe this is something I should risk manage.
Well, there's the dollar cost averaging observation that if you continually sweep your excess cash flows into an investment portfolio that's going to be a hedge against true asset inflation, then that's a wise and rational strategy for a mere mortal. Yeah. I don't think it's for a company or for an individual. I think sweeping your excess cash flows into a basket of treasury assets that are going to appreciate in price as the monetary system expands is rational. And if you try to time that, you know, maybe Bitcoin is trading at 19,000, so you don't do it, so you wait for it to come back. And then maybe it never comes back and it goes to 100,000, and then you lose 5x your money, and your money gets inflated away to nothing because you were trying to be cute. And so when I make an investment, I know there's a 50% chance that I'll be wrong in the next 12 months. Like we bought some Bitcoin, it traded down. What did we do? We bought more Bitcoin. And then people they all get all worked up over it. 7 days after you did this trade, you didn't make some money. Well, I didn't buy it to make money in 7 days. I bought it to hold for 30 years. Yeah, so why don't you come back to me in 30 years and call me an idiot at that point in time? And it all comes down to time horizon. You're thinking about 12 months. And by the way, Keith, in 12 months, you're probably going to beat me on every single trade. I'm an idiot when it comes to figuring it out in 12 months. In 10 years, I think I'll probably be right. But I made the trade because when I looked out 30 years, all the noise dropped away. And I said, over 30 years, I don't want to be holding government bonds. I don't want to hold corporate debt. I don't want to hold a bunch of big tech equities that are already highly appreciated. I don't want to own gold. I can't figure out what to buy. And I found this thing. And I think it's just extraordinary that we even have the opportunity to buy it at this point in time, because 10 years ago you couldn't.